Okay, good morning, everyone. You're most welcome to today's market snapshot. Today is 6th of March 2024, and my name is Norbert Kiza, and I'm happy to be with you all today to take you through the markets for today. Yeah, so we've been having quite an eventful week so far. I believe, of course, the main highlight for this week has been the very sharp move on gold, which I believe has caught a lot of us off guard. A lot of us are wondering what's really happening with gold, and it's one of the things that we're going to go through today. And again, ahead today, we also have the job opening data, which is going to be released sometime towards 6 p.m. And also around that same time, we also have Powell's testimony. So that's what we're going to go through. And right after that, we shall finalize the snapshot with technical analysis. So just briefly looking at how the markets are looking like as of this morning, I believe you can see that we're having quite a bit of a mix. We have a bit of a risk on where we're having euro buying, pound also has been buying quite nicely. AUD USD also has been on the buy side. NZ USD also looking like it's been buying quite progressively. We've been seeing a bit of a pullback on the dollar index. I think from sometime last week, dollar index has been in a downtrend. And of course, that explains why we are seeing USD JPY, the USD Yuan, USD CHF, and again also several other USD pairs also are looking. Several other USD pairs with the USD as the best currency, and we are seeing a lot of them actually pulling back down. Now, quickly focusing on Powell. Powell is expected to make a testimony today in Congress. And again, these testimonies typically happen around this time every year. And essentially, what traders will be focusing on will be to hear from Powell, essentially to hear from him what the guidance is on the economy, but most of all also to see if the Congress men and women are most likely also going to come and try and push Powell to comment on the current rate path, and also to see if maybe there could likely be some hints on a rate cut. So from December last year, we actually saw that there was a bit of a push on many risk on assets like gold, like the US indices. Most of them were actually able to break record highs on the back of expected rate cuts. So now when we got into the start of the year around January, we saw that actually the markets were now mostly pricing in those rate cuts. And we saw that there was actually now also a bit of pushback by the FOMC members, highlighting mostly that they might not really be in a rush to cut rates. We saw this from the FOMC conference we had in January. And of course, looking also at the minutes that we had, we also saw that there has been a bit of that pushback on that rate cut. So now, when we started the year, we're looking at over 125 basis points expected of rate cuts. But now we are hearing some Fed speakers, like recently we had Bostic speaking, and he was indicating that they might cut rates only once. Now, what's the reason for that is majorly because we've been seeing quite a lot of strong data coming out from the US. If you look at the GDP data that has been coming out, we had Q4 GDP for the US that actually was pointing to some kind of strength, came in positive. When you look at the other economies, most of them are struggling to even have a positive GDP or on quarterly basis. So I think many of these strong data, economic data, is guiding FOMC members not to rush. And I suspect this also explains why we are having a very strong gold, and also the other risk-on assets like the pound and the euro are buying. So again, today, traders are going to be waiting to see if Powell is going to mention anything about the rate cuts. And I believe that's where we could see some moves on things like Euro USD, on things like pound dollar, and also on other things like gold. Now, looking at the CME Fed Watch tool, this is where we currently stand. The March meeting, of course, before the March meeting, which is going to be on the 20th of March, we're expecting to see 97 points. There's a 97.0% chance that there's going to be rates keeping on hold. Okay, keep in mind that if we see rates being cut to 5.25, the target range no longer stays as 5.25, but instead changes to 5.0 to 5.25. So which means there's a 97% chance that there's not going to be a rate cut, most likely around March. Now, if we go to May, we see that things start changing, and we are seeing that, you know, that as we go along, we see that now that the rates keep increasing as we go towards into the year. So I'm thinking the earliest we are going to get a rate cut most likely is going to be around May or June this year. And most likely also we should see ourselves crossing into the second half of the year without a rate cut as yet. So we need to see that slowdown coming in. There are no signs yet of any kind of slowdown in the US economy. And I believe that's the reason why the Fed does not want to act too quickly on these rates. So now again, looking at the calendar today, the major item that we will be focusing on today on the calendar, guys, is going to be the job openings data, which again is going to also be coming out at the same time as the Bank of Canada interest rate decision. But I think the major focus for this afternoon or for this US open period is going to be oil. Okay, so that's why I would expect that as traders, we're actually giving utmost focus to Powell's testimony, which again is going to be available for most of you that want to view. You can watch it on CNBC, and you can be able to actually follow those proceedings. Powell is going to be speaking with the Financial Services Committee in Congress. So let's have a deep dive into the JOLTs job openings. So the JOLT job openings have been coming out quite strong. The previous data we had of them for the February data, rather the January data came in quite strong, and you saw that actually the openings increased and jumped to about 9 million jobs for above a forecast of 8.75. Again, really underpinned by that really strong economic data, and again economic status that the US is having right now. The NFP report also for January was a blowout upside, and it really provided some upside move for the dollar. So today, looking at the calendar, if we happen to get a stronger job openings number above this 9 million, I'm expecting that we could potentially see a pullback happening on gold. We could also be seeing a pullback taking place also in Euro USD and GBP USD, plus also some of these other risk-on assets, also like the US indices. We will potentially see some pullback coming in there. Now, the job openings is going to be at 6 p.m. So we are going to see the markets reacting immediately after those job openings actually are released. But also over the course of the US session, from about 5:30 p.m. over all the way to 8 p.m., 9 p.m., we are going to see how the markets are going to start evolving, responding mostly to whatever Powell is going to mention in the testimony. So you can keep track of the comments that Powell mentions. There's a good website here called Financial Juice. Let me just take it to you quickly here. Financial Juice usually provides in bullet form. It provides in bullet form the points that are going to be raised by Powell. Okay, so you can always come to this website just to follow the proceedings from what Powell is going to mention from the testimony. So let's now cross over to look at the current commitment of traders report for gold. A lot of traders this week have observed that gold has been having some kind of unusual order flow on the charts. Again, if you have been on the wrong side of gold, I'm sorry to hear that, guys, but don't mind. As long as you have risk management, as long as you're using stop losses, I believe that trading is sustainable. Okay, risk management is paramount, guys. If you're going to have a career out of this, you need to make sure that you're having risk management. So looking at the current commitment of traders report for gold, this is where we stand. Okay, this is the report as at 27th of February. We are going to get the next report coming out possibly. It should be posted on our website very soon, anytime from now. Now, currently, when you look at the open interest, there seems to be a big open interest on the side for the short positions. And we are seeing that the swap dealers currently have a position of 197,423. But looking on this other side, managed money seems to be holding also a very big position of 103,885. But we are seeing that in the week of February, we had a bigger cut on the short positions and we saw an increase on the long positions. That explains why, if you do the math, you'll see that you have a negative here, negative here, negative here, and a bigger positive on this end, meaning that there was a bigger build on the long positions on gold. And I suspect this could also explain why we're having that kind of sharp movements that we had on gold, again, from the levels of 1997 all the way to where gold is right now. This explains why we're having that strong momentum on gold. So the next week is going to be interesting. And again, the outlook for gold, really, I would say medium to long-term outlook is essentially a buy. And the reason for that is really underpinned by those expected rate cuts from the Federal Reserve, as well as also the likelihood that we're going to get a much weaker dollar going into the year. So we should see more exposure on gold. And again, the other thing also is the kind of trade that gold is having is less of a safe haven trade. I'm sure most of you are aware that typically around the time when we have geopolitical tensions, such as the Russia-Ukraine crisis that we had in 2022, we had COVID-19. You guys remember that time, COVID-19 in 2020. We observed that gold was presenting a lot of upside momentum. But now the trade that gold is having now is very different. It's more like a demand trade, less of risk on, rather less of risk off, or less of a conscious trade, but more of demand. So there is that unusual demand that is presenting itself in gold, and we should see how that pans out. Now, crossing over also quickly to see how the futures are looking like on gold. You notice that the prices in the futures market are actually looking quite hefty, guys. Just take a look at June 2024. We are looking at highs of 2,170. August 2024, the price is looking at 2,189. October 2024 has breached 2,200, and now all this indicating that there is that kind of contango effect where you find an increase in prices on futures contracts, or it also has an impact on the spot price we have for gold. Yeah, so we should see some bit of movements from there. Yeah, so I think that really sums it up really on the economic calendar for today. We can now cross over to the charts and essentially see what we can expect to happen over on the charts. There's also the Bank of Canada rate decision, and again, that will also have a bit of a movement, but I don't expect that movement to really be that much, but you should expect a bit of reaction there, especially if you're looking at things like gold, and also like the Canadian dollar. Expect some movement there. Awesome. So let's cross over to MT5 and see what's happening over on the charts. I hope you guys are excited to see. So let's cross over now and see what's happening. Great. Okay, so for the charts, we are going to start with the Dow Jones. That's US 30. Okay, so look at that spike that the Dow Jones is having right now. Now, guys, on the Dow Jones, this is what we have. Okay, I just want us to go movement by movement, so that we move together as a team. Okay, so around here we had the Nvidia earnings. Okay, we had the Nvidia earnings. The Nvidia earnings were able to take the Dow Jones out of this descending wedge that was started around the 15th of Feb. Soon as we broke out of that descending wedge, we saw that the Nvidia rally took the Dow Jones to a peak of around 39,300. But we noticed that price action, and again, the momentum fizzled out around that level. And ever since then, it entered into a new descending wedge. Okay, so this descending wedge Again, we saw that there were a number of liquidity sweeps yesterday, and we saw that there was a sharp move breaking below that descending that kind of symmetrical triangle, and the Dow Jones was able to achieve this level of 38,400. Now, at the moment, Dow Jones has entered a bullish order block, okay? The same bullish order block that it was in around the time of the Nvidia earnings. That is what supported it to actually able to, that's why it was able to hold this level here. Now, at the moment, there seems to be unexpected move to the upside on the on the Dow Jones, and I'm expecting that we should see it breaching that 50% fib level. And once we manage to breach this level here, then we should potentially see a move above the fib level that should take us around this level area of 38,800. Now, if we happen to get any kind of comments from Powell that the economy is looking resilient, that the rate cuts are likely to happen again this year, if we get any hints of optimism from Powell, I'm thinking we are going to reverse this move, and we could potentially attain the 38.2% fib level that could allow us then to get back to the top part of this descending wedge. Now, keep in mind that Dow Jones is in a bull market. Dow Jones is in a bull market, and it entered the bull market when it crossed its all-time high of 36,900. That was sometime last year. Ever since then, it's been on the upside. So which means in bull markets, typically price action is like this. It tends to have a lot of sharp sells, and sharp sells also tend to occur with very sharp reversals. This is what we saw last night, and we are seeing that that move up is still currently intact, and we should see how it does later today. So of course, I did a couple of trades there, as you can see, and I'm waiting to see how they pan out today. So let's cross over to the Nasdaq. So the Nasdaq yesterday underwent a lot of strong selling, and of course, it was on the back of a pullback on some of the tech, the tech stocks like AMD, which was down by about 4%. We also saw that super microcomputer was down by about 10%. So it really intensified that bearish order flow for the Nasdaq. But I'm expecting that we should see it reversing to at least attain above this resistance level, which I've marked here in green, okay? If we manage to get above that level, then I'm thinking the Nasdaq will also come and create a lower high that will be somewhere around here. And again, then from there, we should then see reversals taking place. But the move for today is majorly going to depend on Powell, guys. Powell's testimony is going to affect the market a lot today. And again, if we get very strong job openings data, it's going to potentially have an impact on the Nasdaq, and we should see it moving to the upside there. Now, the people's favorite, which is gold. So for gold, this is how we are looking at gold, guys. If you look at gold on a H1 time frame, you notice that we're able to break above the descending trend line on the H1 time frame. From the first time we broke above it and stayed above it. That was on the day of PCE. Okay. Now, if you zoom into gold now, it's a no-brainer that gold is presenting a lot of upside momentum. Okay, and that is why you can see if you're very observant or vigilant with the kind of price action being printed, we have so far. Actually, they are not actually three. I actually thought there are three. No, they are not two. You have three bullish flags. Again, with bullish order blocks forming after each other. You had one here. You have another one here, and then again, you also have an asymmetrical triangle there. So gold is very strong bull, guys. The momentum which we had on gold, we call it unusual order flow. Okay, that's what we tend to call it. That's a technical term for it. It's unusual order flow, whereby the momentum, it's like a one-way market. And that's what we have been having with gold. It pumps up, takes long to. Someone was saying that gold moves up like a rocket and drops like a feather. That's the kind of price action we've been having for gold. So if we zoom out of this, we are now almost about to get into, actually, we have breached 50% of this week that we had around November. So the moment we cross above that week, guys, I'm thinking gold is going to, rally a lot, okay? However, we have NFP this week. If the NFP data happens to come out uh, bullish for the dollar, gold is going to have a descent, okay? The descent is not going to be too strong. It is going to be, I would say, relatively weak, okay? And we should see that pushback happen, possibly breaking below this level of 2,124. If we manage to break it, then we should see a descent. At least we should see this move reversed, and we should see it moving possibly to these areas here. But that is the trade for Friday, and I believe around that time you're going to be with one of my other colleagues on the Friday snapshot. Now, let's look at Euro USD. So Euro USD from December, it has been in a descending wedge, which I believe is visible around here. But you notice that we're able to break above that descending wedge and we stayed above it. Right now, we're about 100 pips above that descending wedge. And on Friday, I believe from last week, we had a bullish order block around here, which was created, that was on Friday towards the US session. So after creating this block, we're able to breach the top side of this asymmetrical triangle. And we've been retesting it a number of times, but we've been seeing that every single time we test it, we move higher. So for today, I would be looking at potential Euro USD buys, targeting the 38.2% fib level on the H1 time frame. And the premise for that is going to be on hawkish, on dovishness from Powell. If we get any kind of dovishness from Powell, then we're likely to achieve that 38.2% fib level. Now we have NFP on Friday, and the NFP for last month, we're able to achieve this area here. We're able to move as high as we're able to sell from this level here. Okay, so I'm expecting that Euro USD is going to attain this level again, and when it does, we should see it breaching that level and continuing to move to the upside. But for now, we should see some kind of bullish momentum there, and we should be looking at buying the retracements on this particular asset. Crossing over to GBP/USD, GBP/USD also had a bullish order block that was as big as it was about 50 pips of a block, okay, indicating that there is some kind of bullish momentum that has entered. And you notice that the kind of price action we've been having for GBP/USD has been a bullish price action. We were able to break below that channel. That was around, we broke below this channel around the 28th of Feb. And immediately after breaking up below that channel, we saw that the price action was able to actually retrace, but it did not sell too much. And now GBP/USD is a strong buy, and we should potentially buy it to attain this level here where I've marked with my top box here, around the level of 1.27700. For us to reach that level, it's really going to depend on the it's majorly going to depend on how the NFP data comes out on Friday. But if we get fairly strong NFP data, then it's going to hit the GBP/USD, and I believe we shall then reverse this move. But for now, we are in a buy channel, and we should be looking for buys on retracements, just like we did here. Okay, as well as also here. These are the best opportunities to buy when you have the retracements hitting, coming close to the rising trend line. We can look for buys along those levels. Now, finalizing with the VIX, this is what the VIX is looking like right now. Okay, the VIX again is important for those of you that are trading indices. Okay, the VIX right now had a bit of a strong buy yesterday. It was up about 8%, and we saw that there was actually that reversal to the downside. Looking at seasonality, around for April is when we tend to see a fairly strong VIX because it's usually tax season in the US. And around that time, a lot of traders are selling, cutting back on their stock holdings. So if we see the VIX potentially selling to the upper level of this channel, then we should potentially see the indices like the Dow Jones and the Nasdaq would potentially reverse, and we could see how they trend. Okay. Awesome. That's it from me, guys. I will now be taking your questions. If you have any, I'll now be taking your questions. If you have any, awesome. So kindly, guys, send in your questions if you have any. We have a question from Apollo. Apollo, you're saying, please share that site for the gold commodity exchange. Gold commodity exchange. Yes, yeah, I get my data from the CME. Okay, so I'm going to share it. Let me just see if I can get it for you guys. I get my data from the CME, and the CME essentially is where is the exchange, is a Chicago Mercantile Exchange, and it's where futures contracts are traded. Okay, yeah, so you can check it out so that you can get that data for uh, you can get that data for yeah. So the website is actually this one right here. It's called, you just go to Apollo, you can just go to CME, go to cmegroup.com. Okay, go to cmegroup.com, and then you can search for gold contracts. Okay, awesome. So any other questions, guys? If you have questions, please send them in. Hello, Norbert. Today, I only want to look at BTC and gold, especially BTC. Yeah, BTC has been on a tear. It's been on a tear. We've been seeing it really pumping a lot. And of course, the reason for that has been the expected halvening, where we have the reward that miners get from Bitcoin is usually, yeah. So again, guys, keep in mind you can benefit from Bitcoin on FX Pesa. Okay, FX Pesa, you just have to search for BTC USD. So you search for BTC USD, and it's going to bring up for you the Bitcoin chart, and you can actually trade it. You just need to make a deposit on your account and trade that opportunity. Okay, so that part of the question, uh, gold. Okay, so I covered gold, and for gold, like I told you, if we break below that bottom part of that asymmetrical triangle, then we are going to see gold retracing, and it's going to potentially come back to these levels here. Okay, but keep in mind we have 3 bullish flags on gold, indicating strong bullish momentum. Okay, and again, if you're a trader, you should be keen for these things, because this is what helps you to benefit. Okay, so Apollo, you're saying look at ADP. Look at ADP expects a spike on jobs while JOLTs shows a weaker job openings, which is more significant. I think we tend to give more focus to the ADP rather than JOLTs. But if we get a disconnect in the data, or in other words, mixed data, then we should potentially see some kind of a choppy market. But when you're looking at it in terms of significance, you look at the ADP report more than the job openings. Okay, yeah, but strong ADP Apollo and weak jolts essentially then means what? That essentially means that it just shows us that that there's mixed data. So we should not see that much of a market reaction there. It could then be a bit of a choppy reaction from the news. Yeah. Any other questions, guys? Any other questions? NEO just reported its earnings, one of the largest companies in China. How will it affect its economy? Now, guys, I just want to say this about the EV market. EV market now, most investors are complaining. I have a friend who was able to get into NEO. They are now sitting on a bit of a loss, but again, for them, again, really, they are more future looking rather than really short term. Yeah, but the EV market seems to be having a bit of a tough time. And unless you, I think one of the EV companies that may thrive well is going to be Tesla, simply because Tesla has a business that it has even under aside from the solar roofs and the cars, it has battery packages. Okay, so it sells batteries, and that business is doing fairly well. But the guidance that most of the EV companies, like Rivian, which when reported earnings, Rivian's earnings have been looking quite, they have not been looking that good. Other companies like Tesla, again, also seems to also have indicated a bit of weak guidance for Q2. rather for Q1. And so even Neo, yes, I don't know how the earnings were, but there's that kind of weakness we've been getting from a lot of those EV companies. What's the most promising trading pair for that day? Tripskid, I think that's a really, really good question. Yeah. Looking for the best opportunity for today. Yeah. I would go with the indices. I would go with Nasdaq and Dow. I think Nasdaq most likely is going to have a recovery. I'm possibly looking at it recovering to the upside of that 38.2% fib level on the back of expected dovishness and strong job openings. Should we get that recovery, then we should then get a better opportunity for us to sell it, and again also be able to get a higher premium level for shorts. Okay. Yeah. So that one, I think, for me, is the most promising. Okay. Euro USD, GBP USD, quite choppy, but choppy with an upside move. Okay. Yeah. What's your say on oil cash, Francis? Now, I have not checked out oil in a bit, but I know that oil has been recovering quite substantially on the back of increasing demand. And again, also, we've also been seeing that OPEC has maintained its guidance for its members that they need to potentially, increase, rather cut back on their supply. So I believe that's also one of the reasons why we're having oil rising. Yeah. So I think oil is fairly bullish, okay, for now, and you can expect potentially maybe to buy retracements to the upside. Yeah. Are there any other questions, guys? Hey, Holyfield. Hey, Mana. How are you doing? Hey, J Squad. Hey, Ibrahim. Hey, Brian. Hope you guys are doing awesome. Best indicators to use on a phone: 50-day moving average and 200-day moving average are the best. There's also a nice tool that I also recommend clients to use, which is for support and resistance, but it can only be used on the computer. So, Thomas, if you have a chance of actually, if you trade on a computer, you could also potentially be looking at potential look at that support and resistance tool. Yeah. So I think that's it, guys. Okay, we have one more question from Apollo. I didn't get your levels on BTC. What levels are you looking at, having broken its all-time high yesterday? Oh, BTC took out its all-time high. That was 69,000. It was at 69,000, Apollo, I think. Apollo, maybe, if you can. Okay. Okay, so this is what BTC is looking like, guys. We've been bullish on BTC. I think by far and large, guys, we've been bullish on BTC from the time when the ETFs were released. BTC is a strong buy. Again, guys, like I said, and I'll repeat this, the thing with the price of Bitcoin, okay, and again, if you're trading it on FX Pesa, many investors around the world have been skeptical about crypto for a very, very long time. A lot of them are very conservative. And again, the reason why Bitcoin is actually having the kinds of moves it's having is largely because of the inflows we've been getting from ETFs. Okay. So traditional investors can now access this product without having to essentially get onto crypto exchanges and all these things. You can access it. And again, FXpress has had BTC USD on its platform for ages. Okay, so you don't have to risk going on a platform you don't understand and all these things. You can just get on MT5 and buy it. Now, Apollo, the moment we broke above the all-time high and retraced. Once we break above that all-time high and do not retrace but stay above it, that is officially bull market. Okay? And now that goes to say that there is no limit where Bitcoin can go. If it stays above here, it could go as high as it wants. Okay? Because of that institutional demand, because of that highly anticipated halving event that is expected in April. Okay? Yeah. So there's also one question from Lamik. You're saying, with Elon Musk suing OpenAI, how will that affect Nvidia stocks? Guys, okay. It's really hard to keep up with Elon Musk. That guy is always up to a lot of Elon Musk is always always up to a lot. Now, to speak about Nvidia, The price of Nvidia is not affected by whatever Elon Musk does. Okay, the price of Nvidia is affected by demand from traders, demand from investors, and also forward guidance. That is what affects the stock of the price of Nvidia. Now, Nvidia provided very strong forward guidance. Okay, they provided very strong forward guidance, and the CEO for Nvidia, called Jensen Huang, indicated in the most recent, after the most recent release of the earnings, that was around the 21st of Feb, that it has reached a tipping point where the demand for AI chips has again, the demand has outstripped supply. Okay, so which means Nvidia is really going to grow, and its stock price is going to rise on demand, purely on demand, not on lawsuits, not on what Elon Musk is doing, but purely on demand. There will be pullbacks here and there, but again, the demand will essentially outstrip, and we should see that reaction there. Lamek, you're saying, hello, Norbert, how do you identify and trade change in trend using key highs and downtrend? So I tend to believe that using, I'm an old school trader, so I use a lot of patterns with my trading. I essentially look at different things like channels. I use wedges. Then I look for signs of bullish order flow on the charts. Such as like here, if you see what we're having here, we're having quite a bit of bullish order blocks like here. So I use a lot of those things to look at trades. Okay, yeah. Then I also use my moving averages to show me how price is moving. Like for instance, if you look at the moving averages here, you notice that the 50-day moving average has been trending above the 200-day moving average, showing us that there are signs of potential strong upside momentum, and we could potentially be looking at buys at areas such as that. Yeah. So I'm kind of old school with my trades. Yeah. Are there any other questions? It's been an amazing and busy session today. Any other questions, guys? Martin, you're saying, sir, but I tried using support and resistance on my smartphone. Yeah. So now, guys, I want to debunk support and resistance. It's not merely support and resistance. When you're using support and resistance, you focus on major resistances and minor resistances, major supports and minor supports. You look for you look for sales at major resistances if you're doing swing trading, and you look at sales on minor resistances when you're doing scalping. Okay, the same applies for when you're looking at supports. You look at swing buys on the major resistances, on major supports, and you look at scalps on minor supports. Okay, so most of us mark wrong resistances, or we look for longer term trades on minor resistances. Okay, like for instance, when you look at the Nasdaq here, just as a quick example, this is the Nasdaq. Okay, so this is a major resistance, this one right here. Okay, right, because it has not breached that level before, it has bounced down from that level. Same thing applies also for the Dow. This right here is a major resistance. So do not look for swing trades on minor resistances. Otherwise, you're going to end up getting trapped in your trades. Okay. Yeah. Awesome. Any other questions? Thomas, I use Lamek moving averages. You focus on the crossovers. Okay. Crossovers. When you have a 50-day crossing above the 200-day, that's a buy. 200-day crossing below the 50-day, that's a sell. Then also in day trading, when you have a price action breaking below the below the 50-day but staying above the 200-day, that is a buy. Okay, like for instance here we had price trending below the 50-day but staying above the 200-day, indicating that we should be looking for buys. Okay, yeah, that's how you use moving averages. Yeah. My 50-day moving average is my blue, and I tend to use that because my bullish candles are blue. So if your bullish candles are green, then your 50-day should be green. And if your 200-day or if your bearish candles are red, then it means that your 200-day should be red. So it depends. That's just me, but you can color them however you want. Okay. Awesome. So I think that's it. If we don't have any other questions, I wish you guys all an amazing trading day, guys. And this essentially just wait and see what happens later. I wish you all guys amazing. Thank you for the session. And we chat soon, guys. Cheers and happy trading, everyone. Yeah.